Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 21st of August. The information covered this evening is general advice only. This evening's presentation will be broken up into two components where we look at portfolio investing using the algorithm engine to identify blue chip stocks predominantly within the ASX top 50 that we're holding overweight positions to, and obviously new positions coming into the portfolio, which may start off as a smaller percentage allocation, but we build on that allocation as they move up sort of the conviction list. And part of tonight's recording will be to share with you the opportunities that we're focusing on in our longer term investment portfolios. Then in the second half of the presentation we'll look at momentum trading, and in particular using new technology that is now available in the member area, which is the trade table screen, which captures trading opportunities off the back of the algorithm signals with a focus on a holding period between 7 to 45 days, and we'll review those holdings and the performance of the new trade table technology. Momentum index trading, this is where using the advisory blog I comment on whether we're on the long or short side of the S&P 500 and the XJO. I'll start this evening's review of the charts by having a look at the Nasdaq, the S&P 500 and the XJO. But this screenshot here just captures the analysis around the S&P 500, where on the 10th of the 8th, the highlight there was just drawing clients' attention to the rolling over pattern that's occurring in the market and wanting to be on the short side of the index trade under that structure. If you've got any questions following tonight's presentation, please contact me on 1300 614 002. And as a reminder, if you would like to take a free trial and check out the new trade table technology, maybe it's even reactivating an old trial that you've had, just visit our website, click on the free trial link and then follow the prompts. If you need any assistance with that, call me anytime in the office and I can help you out. Okay, so let's jump straight into a graph of the indexes and then I'll analyse what's gone on the advisory blog. So the Nasdaq here is where most of the selling's occurring, just looking at it from global markets. Obviously the Chinese market's weak, Japanese market's strong, Europe's got declining earnings, but broadly in the US where the selling's taking place is in the growth technology stocks. There could be further downside here, so it could be sort of looking at downside risk to around 12,000 on the index, which would be about another 7-8% from where we are at the moment. But certainly within the technology space, there's some great opportunities, and on the advisory blog over the coming weeks I'll really be highlighting which names there you want to be adding into portfolios. If you are trading US stocks, if you're not, there are the equivalent in Australia in the ETFs, and I'll have a look at a couple of those shortly. But in the case of the Nasdaq, stay short the index whilst it's below that moving average. If we look at the S&P 500 and the pattern here, it's a little bit similar. Stay short the S&P while it's below that 10-day average. And on our domestic market, the XJO, we can see here it's made a lower low, lower high overhead resistance at roughly 7,350 points. And the same thing applies, stay short the XJO whilst it's below that moving average there. If we have a look at what's gone on the advisory service, just drawing your attention today to global cybersecurity. This is one area, global cybersecurity, AI, robotics. They really are growth areas. It's just a matter of picking up exposure to those sectors at a fair or a reasonable price. So the ASX listed ETF here to keep an eye on is Global X Cybersecurity. This is the Nasdaq listed version, which is obviously one that we're active in. That's on support there around that $22, $23. The ASX one that I was leading to there is Global Robotics ETF. So this particular one, I've drawn a band there, somewhere between sort of $65 to $70. You want to start looking at accumulating that. I don't think it takes out the low from last year. So you want to be marking down that range and starting to think about adding some of that into your portfolio. NIB Holdings, we'll take a look at this in the second half of the presentation. This is a new position that was added into the ASX 200 trade table, and it's had a decent rally today. Transurban, This is something that if you're tracking our top 20 or top 50 investor model, the correction here from $15 down into $13 now brings this into a range where it's shifted from sell conditions, which is the red marker at the top, into algorithm buy signals, which is the green marker at the bottom. So expecting that to form a trough pattern somewhere within that yellow targeted range. Northern Star Gold looks to be setting up essentially as equity markets roll over a little bit. The inflation reads are likely to soften in the coming weeks and months, and we would expect that to create an environment where gold can start to perform better than what it has been. Northern Star is one way of capturing exposure to that. The S&P 500 index, this was just an update. The original post there on the 10th of the 8th was the index rolling over, and on the 18th of the 8th just confirming that that's still in place. The Nasdaq, one way of benefiting from it has been buying the SQQs, which is the short Nasdaq. So inverse, it goes up in value when the Nasdaq goes down. So it's rallied about 15% off the lows now. The Russell Top 200, so this is a US listed instrument that I've been communicating to our subscribers about, which if you're wanting to short the growth stocks in the US, this is one way of doing it. The iShares Russell Top 200 Growth. We've seen that roll over now from around 165, now trading down at 155. And there's just earlier commentary about setting that trade up. Northern Star, Russell, so continue to sort of just reinforce those themes. Moving back through the old articles here, and we're just backtracking over the last 7 days in between essentially commentary since last week's webinar. US interest rates, it's interesting just to look at the long-term picture here on the 10-year Treasury. Reminded back in the 80s when interest rates were up at around 15%. What we've seen is the bounce off sort of those emergency low levels. But it's likely that it would be a surprise to see inflation continue to push higher and interest rates need to increase. We're probably fairly close to the top, I think, in the interest rate cycle. And then there we are back to last week's webinar. So let's jump into the ASX Top 50. I'll move through these, highlight which ones we're focusing on for investor portfolios, and then finish this evening with a review of the new trade table technology. So what we're doing here is going into the watch list, getting the percentage gains to the top, organising these in buy signal. So I'm going to go through all the ones that are in essentially the model portfolio. So by being in buy signal here, if you're joining us for the first time, it just means that you'll find all these stocks under buy in the ASX Top 50 portfolio. You get the least number of days, so you can see here QBE was added recently, Transurban only 3 days ago, 4 days ago, and you can scroll back through and have a look at those current holdings and the performance. So what we're doing tonight though is going into the watch list, organising them in buy signal, and I'm just going to move through these and share some analysis with you on which ones to scribble down on your notepad and add to your watch list. So BlueScope we like. We haven't built an overweight position in this, but we have added it into portfolios, switched from sell conditions there into buy. The earnings result today was essentially in line with consensus. Santos is our preferred energy stock. It switched from sell conditions there into buy. Support's about $6.75 and it's about $1 higher from when it was added into the portfolio. Macquarie shifted from sell conditions there into buy. Support's at around $1.65, but we're mindful that the banks, Macquarie included, are unlikely to deliver a lot of upside capital growth from where we are at the moment. So again, they're not overweight positions in our portfolio. Aristocrat we like, so the switch here from sell conditions into buy, we've added that into portfolios. Xero, so this has recently gone from sell conditions into buy, and comfortable adding a small component of that. You can see I've created a bit of a band here, which is just an opportunity to add a partial position size where we are at the moment and add to it if we see it lower in that 100 to 110 range. Fortescue under buy conditions, so iron ore has actually held up reasonably well, still sitting above $100 a tonne. So Fortescue's in the portfolio under algorithm buy signal. Wesfarmers, this is one of our preferred holdings, again recognising that it's probably not likely to do a whole lot on the upside over the coming weeks or months, but the switch here from sell conditions into algorithm buy supported around that 45, 46, and you should be holding Wesfarmers in your portfolio. Lottery, smaller position allocation here than, for example, Wesfarmers, but the switch there from sell conditions into buy, lottery support at around 480. Stocklands shifted from sell into buy, so we hold a small amount of that in portfolios at the moment, supported around 390. Origin Energy, we've cashed out of that on the basis that the takeover offer is likely to proceed. Transurban, now this is a new addition. I added some commentary on the advisory blog today regarding this. So the switch there from sell conditions into buy, and you want to start adding that into portfolios with accumulating some stock there at $13. Brambles, switch from sell conditions there into buy, so I've had this in the portfolio for a while now, but performing very well. GPT, switch from sell conditions into buy. A consideration, rather than holding too many individual REITs, but we are comfortable with GPT. If you're not familiar with them, I just draw your attention to SLF, which is a property-based REIT ETF, and the other equivalent is VAP, which is the Vanguard top 300 REITs. So SLF and VAP, have a look at those. But GPT we quite like. We're seeing the company do a great job of transitioning from essentially being overweight office exposure to increasing their logistics exposure, now representing 30% of their portfolio. So we think GPT is reasonably well placed within the REIT sector. ResMed, switch from sell conditions there into buy. You want to be starting to accumulate that at around $26. BHP, so Fortescue, BHP and Rio are all in the portfolios at the moment, so there's obviously a bit of negativity around iron ore prices and concerns around slowdown in China, but despite that, iron ore's actually rallied off its lows of last week, so we're still comfortable with the iron ore exposure there in those major resource names. Coal's largely bumping sideways, but we hold that in portfolios for the dividend and income yield. Amcor, now this is one that if you don't hold this in portfolios, down here you want to be starting to accumulate a position in Amcor. CBA, likely to sort of test support down there at around $92. We just don't get excited about the Aussie banks, but comfortable holding a very small amount of them in portfolios. Telstra, being a buyer of this on the correction here, somewhere between sort of $3.80 and $4. You want to look to accumulate that if you don't hold it. Newcrest, in the portfolio, but obviously under takeover offer there, so that the spread might be $1 or something on the upside there on the takeover price, but that's why we're tending to lean more towards Northern Star over Newcrest. Rio Tinto, as I mentioned, under buy conditions, switch from sell there into algorithm buy, supported around 100. Insurance Australia Group, the earnings results slightly disappointed, but if we look at the switch there from sell into algorithm buy, the stocks performed pretty well there off that $4.50 base. ANZ, largely bumping sideways, but it's still our preferred bank, so the switch there from sell into buy supported around 23, and ANZ's the largest of the banking exposures that we hold, and that's really sort of working out quite well. Northern Star, if you don't have gold exposure, my suggestion would be to take a closer look at Northern Star, possibly Gold Roads as well. The strategy here is you can accumulate it on this sell-off or just be patient and wait for a reversal back above the moving average there if you're trying to finesse the entry point a little bit further. Qantas really bumping sideways there at around that $6 level. CSL, for longer term investors, you want to be accumulating that. I think there's a fairly strong argument that 12 to 24 months out, CSL trades back up above 300. Suncorp, switch from sell conditions there into buy, keep the position size small with Suncorp. Likewise with QBE, start to think about adding a small amount of that, but keep position size small. ASX, this is one a little like Amcor, where I'd guide you towards making a note if you don't hold this in your investor portfolio down here, anywhere from sort of 52 to 57, 56, $58 within that range. You've got to be patient. I think you have to be sort of looking 12, 24 months out. We know that the company's got capital expenditure coming up that's going to mean that there's not going to be anything exciting in the upcoming earnings results. We've got transaction flow probably decreasing a little, and then we've got capital expenditure increasing. So there's not going to be a lot of good news on the horizon for earnings. But the correction that we've had in this from $95 down to $57, you're getting to a point where if you don't hold it in portfolios, you should be starting to accumulate some ASX. Mirvac under buy conditions, but again, keep your property exposure relatively small. Now what we've done is roll over into stocks that are under sell. I'm going to reverse this around because I don't want to go through all of them. I'm just going to go to which stocks are under the most selling pressure today, and I'm going to get the sells to the top here. So we're now looking at stocks under algorithm sell rather than algorithm buy. So I'll just go through a couple of these. So Westpac, so you can see here the main pattern that the algorithm's picking up here is the lower lows, lower highs. And if we have a look at the most recent structure there, made new lows, made a lower high there. And the price action, just as a final filter, we look at the red arrow and the price action below the moving average. Now, if you wanted to find more of these opportunities on the short side, the way you would do that is go into this pivot table, pull up the list that you want to work with, and again, we'll go to the top 50 as example. And what it's doing is saying out of all 50 stocks, these are the ones that you would be wanting to focus on. Because they're under short signals, they've got the red arrow and the price actions below the moving average. So I'll just toggle through a couple of these just to share that with you. So red arrow below the moving average, algorithm sell signal, red arrow below the moving average. So you can see here, if you're looking for shorting opportunities in the market, this pivot table is a great tool to help discover those setups. Again, primary algorithm sell, red arrow, and price action below the moving average. Alright, so now let's finish off that investor discussion, and we'll jump into the new trade table and take a look at what the technology is doing first of all, and then have a look at the holdings in the portfolio. So the trade table technology is identifying shorter term holding periods off the back of the algorithm buy signals with a focus on stop losses, so tight stop losses in place, and a holding period of somewhere between 7 to 45 days. If we scroll through and have a look at the recent positions, so you can see there that Aristocrat was closed out after 34 days, Reliance was closed out after 27 days. We keep moving back through these positions, and you get down to your win-loss ratio here, so you can see the stop loss is doing what it needs to. It's containing the losses on the downside, letting the gains or the momentum rally, and we're seeing gains up to 25% here in some of these. And if we scroll down and have a look at what it means from a net asset value performance, so this assumes $1 million invested in the trade table. Now the percentages don't change whether it's $10,000, $100,000 or $1 million, but what you can see here is it holds on to the gains, ideally not giving much of it back as a result of the tight stop losses, but whenever the momentum in the market is to the upside, it's capturing that upside and not giving too much back during the sell-offs. So far this year, the ASX 100's up about, it is up 13.8%, which is much better than the XJO. And if we have a look at what that means right at the moment in the market, is we're in mostly cash. We've actually only got one open position at the moment. It was NIB Holdings. It was added 3 days ago. And I'll just jump into the chart and we'll have a closer look at why it was added. So the pattern that it's picked up here is the algorithm buy signal, the green arrow, the close above the moving average. And following that entry, the stock's obviously had a very substantial rally there. The stochastic's turning higher. So the stop loss goes below that pivot low there. If we jump back, you see the stop loss there at $7.75. So If we go back into the chart, that'll be just under that low there. So where I've got my mouse cursor there, or the crosshair, you can see up on the top panel above there, it's got the low at 775. That's where the stop loss goes. And the idea of the momentum or the trade table is, as long as the momentum continues to the upside, it's going to stick with the trade. So there's no defined exit at 10% or 20% gain. It's all based on momentum, and we've got that tight stop loss there to protect the position on the downside. So it'll be interesting next week to keep an eye on NIB, and there may be other new positions that pop into the trade table. So again, if you haven't taken a free trial of the technology, jump on the website, or if you want to reactivate an old trial, jump on to investorsignals.com, click on free trial, and again, if you need any assistance with setting that up, just give me a call. All right, so that's the new trade table technology. It's very exciting. The performance has been tremendous year to date. We now have a managed fund available that's tracking in real time the trade table. So if you want to automate your exposure to the trade table, speak to me about the new managed fund, Class C units, and I can provide you more details on that. To finish this evening, I just want to leave you with a summary of the stocks that I would like to think that you have on your notepad as a result of tonight's presentation, and obviously if you're an existing member, just from following the commentary that's gone on the advisory service. So let's just run through these. ASX, so we touched on this earlier, but this correction down here to $57, $55 is a buying opportunity, and you should be starting to accumulate that. Amcor, correction from 19 down to $15 is a buying opportunity. You should have that in your portfolio. ResMed, the correction here from 37 down to 26, start accumulating that. Initially keep the position size a little bit smaller, but ResMed at around this $25, $26 is a buying opportunity. Another name that I suggest you add to your watch list, under a bit of pressure, obviously if global trade's slowing down, Cube Holdings has corrected from $3.30 down to $2.70. Combination of slightly slower global trade and also higher interest rates, obviously weighing on a number of stocks. But Cube, the correction here of about 20% off the highs. You want to be a buyer of this somewhere between $2.40 and $2.70, so keep that one on your watch list. On the gold front, let's have a look at Northern Star, and then we'll lead into a couple of ETFs. Northern Star, I've marked this out between 8.40 and 10, so again you can either just start accumulating it or just be patient and wait for it to get above the 10-day average. Now, it's interesting sort of the difference between trading and investing. Investors tend to sort of accumulate stocks within value ranges, whereas traders will be more disciplined around momentum reversing and tight stop losses. So Northern Star's not in the trade table yet, but I strongly suspect that in the coming days, when we do get a close above the 10-day average, you're going to see Northern Star drop into the trade table, and the trade table is going to hold it for that targeted period, 7 to 45 days, based on momentum. But we're starting to see a number of stocks have the primary algorithm buy. We just haven't seen the momentum turn higher, but we're not too far away from probably seeing an increase in positions in the trade table over the coming week. So again, you want to jump on, grab the free trial, and start keeping a close eye on those. Outside of individual stocks, let's look at the ETFs. So GDX is the gold miners. The fundamentals are setting up for gold to be a buying opportunity. So let's give you two there to look at, GDX or MNRS, which is the Beta Shares Global Miners ETF. So $4.80. Again, you could start accumulating it now, or just wait for it to get, for the momentum to reverse and it go above the moving average. A couple of tech exposure plays here. So on the ASX, it's the Robo, which is the Global X Robo, Global Robotics and Automation ETF. So the support down here at around $70, and you want to start accumulating that. Again, I don't think it comes back down and takes out that low. So we know tech stocks are a little bit expensive. We know this is where the selling is at the moment, but the growth is real within AI, robotics. cloud, cyber security, they're the areas you want exposure to, so be willing to be a buyer of that on the dip. And also the beta shares, robotics and artificial intelligence ETF. So same thing, if we have a look at what's happening here, the correction from $13 down here into this sort of $11 to $12 range, be prepared to accumulate that. Again, I don't think it gets down to retesting these lows, so 50% retracement of that's going to be around $10, so somewhere around sort of this $11.30, $11.50, you want to be willing to be a buyer of the RBTZ ETF. And finally, granted, much higher risk, but you may like to keep this one on your watch list, the CNEW, which is the China New Economy ETF. The correction here from 10.50 down to 6.50. You can see there I've created a fairly wide band down to $6 support. But this weakness and trouble that we're going through at the moment with Chinese property stocks and other considerations with Chinese equities, we may get a sort of a heavier flush out in this area of the market, and it may create a fairly compelling longer term buying opportunity. So you may like to add CNEW to your watch list and notepad. Thank you for listening in, and again I guide you towards our website, signing up for the 30-day free trial, and I look forward to speaking with you again next Monday night, and in the interim sharing with you sort of other considerations in the market from a real-time perspective via the advisory blog each day. Thanks again for listening in.